Coal of Africa is an emerging developer and a producer of high-quality thermal and coking coal. Their operations are in Limpopo province, and it has battled to obtain permits to mine near environmentally sensitive areas. It has a market cap of 1.7 billion rand, but is not currently profitable and pays no dividends. Not profitable, Paul. We've had the share price falling back about 71% thus far.
Yeah, I know it's getting squashed. I know when we spoke about it last, it was trading at around sort of 3 rand, 3 rand 50. It's fallen down to 2.
Yeah.
I don't know, it's quite a tricky story because it's got this coal asset up in the Limpopo province, the Mercado thing, and then also, you know, some other associated Vele and other coal assets. They had a situation where ArcelorMittal took a stake because ArcelorMittal wants to buy the coal to put into its steel plants. But unfortunately, Exxaro, the one we were just talking about, elected not to follow their rights in terms of a sort of partial recapitalization. With the recent results, they indicated that a Chinese company called BHE, stands for Beijing something or other, they are now coming in and underwriting a rights issue or a placement for $100 million.
Yeah.
But the market hasn't been all that positive about it. I'm not sure where the permitting things are. I mean, it's 30 kilometers away from Mapungubwe. That's the problem.
Right.
Where the old, you know, golden rhinoceroses were found on the side of the mountain.
Yes.
But 30 kilometers, that's not like, you know, across the fence. That's 30 kilometers. So I don't know, maybe that's okay, but it's a sensitive, beautiful area, but coal mines, but they want the jobs. I think the government wants them to go ahead. But it's just a lesson, unfortunately, of how, you know, exploration and development companies, as exciting as the assets may seem, are prone to some big value swings while they kind of get themselves capitalized to do what they need to do.
Yeah, and what could be the major kicker for Coal of Africa going forward?
That we forget about looking after the environment. No, that's not possible. And 30 kilometers, that's like next door as far as I'm concerned. So, you know, of the damage that can be done, you just think of the effluent, how far it can spread. All right, this is not like Chernobyl, it's quite a way still. But seriously, I'm afraid that it is an environmentally, that Vele area where they want to do this new mining development is very environmentally sensitive. However, the Chinese are putting in, I think, 100 million. Now, what the Chinese want in getting hold of the resource that they'll develop, they usually get. They've got pretty good contacts with those who make the rules in South Africa. So I think it'll probably go ahead, and I think it'll probably turn out reasonably. Would I want it? No. A matter of principle, I'm afraid.
Paul, when you look at the liquidity of the stock, is it something that you'll be getting into right now?
Look, it's easy enough to buy. The question is whether you'll be able to sell it later at a profit.
Yes.
You know, the stock has been a little bit loose. The turnover isn't enormous. But look, it's got a talented management team. John Wallington is an ex-Anglo coal guy. You know, he knows the game. I don't know, you've got to understand with coal mining, there are two kinds of coal mining. There's either a coal seam, which is like, you know, 100 meters or more below the surface, where you can use stope-based longwall mining, sometimes with machines. And then as long as it's deep enough, the surface doesn't collapse. Or you can do open cast mining, where basically the coal seam is close enough to the surface that you just strip off the overburden and then you dig out the coal, which creates, by the way, big mess. Understand?
Terrible,
big mess.
terrible.
So, I mean, that's what we're talking about. And a lot of people are anxious that, you know, coal mining, so it's not only of a concern when you burn the product, but it's also a concern in terms of what happens in the coal mining process. So, I mean, for me, quite a risky sort of a thing. They've got to do a lot of work. They talk about moving the coal out via Maputo, via the Matola port there and so on. So a lot of rail infrastructure which has to be built. So I think, albeit that the asset appears to be quite attractive and that ultimately something useful will come out of it, I don't think one wants to be buying this stock right now.
Are you leaning towards?
I'm leaning towards not hot, yeah.
So Ian, also not hot.
Not hot.
So
no.
two not hots on Coal of Africa.